Hello, everyone. I'm Nathaniel Freeman, and this is Freeman's Money. And today we're going to be talking about variable interest rates versus fixed interest rates when it comes to mortgages. The reason we're going to be talking about this is because I've had a lot of clients recently and a lot of conversations about this subject. There's a lot of people that don't know a lot of the information about it, so I'm just going to clear up some things. I am a mortgage agent with Dominion Lending. My office is in London, Ontario. If you have any questions, my information will be in the description down below. But let's start off with fixed interest rates because this is usually what people hear about. When it comes to fixed interest rates, it's usually a fixed interest rate means that when you get your mortgage, you have that interest rate for the duration of the mortgage. It doesn't change, it doesn't fluctuate. Duration of the term of that mortgage. So about 5 years, depending, sometimes 3, 2, 1. Now, that interest rate is usually higher than your variable interest rate. And the reason for that is it's based off of the 5-year bond. Now, we're not going to get into how that calculation works or what other factors in there, but just in general, if you see the 5-year bond go up, that means fixed interest rates are going to be going up soon. If you see it go down, it usually means that fixed interest rates will be going down soon. So, when it comes to fixed interest rates, another thing is they have a bigger penalty than variable interest rates by a substantial margin. With some like when I redid my mortgage, if I had a variable interest rate, I would have only paid around $1,500. But since I had a fixed interest rate at the time, my penalty for pulling out of my mortgage and refinancing was $7,200. So that's quite a big difference. Now, variable interest rate, like the name describes, can fluctuate. It can go up and down. They are usually cheaper than fixed interest rates. So, for example, you could get 2.1 fixed interest rate, and at the same time, you could get 1.35 variable interest rate. That's the difference between them right now. When it comes to variable interest rate, it's determined by a meeting that happens 8 times a year where they determine whether or not it should go up or down. Now, on average, if you pick a variable interest rate, you will save money over time. With the market rate now, there's a lot of people concerned or don't believe that's true right now, just because they don't believe interest rates can stay this low for that long. So they think the variable interest rate will rise. And if you got a fixed interest rate right now, you could be getting, just above 2% or maybe just below it, depending on which lender you go to. Of course, that completely depends on your situation. But a variable interest rate, you have a cheaper penalty if you want to pull out of it early. Usually, you save money going with the variable interest rate, but you do have that fluctuation. Well, 1 month your bill could be $50 more, or it could be $50 less, and it can change quite rapidly. Usually, they try to change it only 0.25 at a time. There was a time in the past, I think it was 10 years, where they did 0.5, and that's going up, by the way. So when they did that, they decided that was too much of a rapid change for the market, so then they brought it back down to 0.25. They like to lower it a lot quicker than they're willing to raise it. When they're raising it, they really want to do it a little bit slower, help people figure out their situation. If it winds up being too much, you can jump into a fixed interest rate. But yeah, that's just a little spiel. Variable interest rates, like I said, you do save money over time, but you do have that uncertainty. With fixed interest rates, you can have, a little bit more security, but you might not save as much money as somebody with a variable interest rate. So, really depends. And it also depends on your situation. If you know you're going to be moving out of your house in 3 years or less, or you don't know, but you do not want to stay in that house for a long period of time, variable interest rate's definitely the way to go. If you know 100% for sure, like when I was studying being a mortgage agent, and before I went full time, I decided to refinance my mortgage, pull out some equity. I picked a fixed interest rate because I know I'm gonna be in this mortgage for 3 years, because with my income, I have to build the business and I have to get it to the right amount before I could refinance again. Plus, I got a very, very, very good interest rate, so I want to hold on to that for a long period of time. I got like 1.84. Great, fantastic. I'm a happy guy. But it's dependent on your situation, so really have a conversation with your mortgage agent. If you do have any questions, I'll put my contact information down below. And have a great day, guys. I'll see you guys next week. And my bathroom is coming along swimmingly. I've almost got the shower. The shower should be fully functional on Tuesday. Then I'll be doing the flooring, and then it's just paint, mud and paint. That'll be all that's left. So hopefully very soon it will be done. Anyways, ciao for now, guys. I'll see you here next time. If you like the video, smash the like button and subscribe to the channel. See ya.